Hello, everybody. This is Greg Gossett with Gossett Trading and Mentoring Live, and today is Thursday, August 1st, 2019. We are now in the final hour of the market, and as many of you know, I believe the closing prices, or the prices that are as close as you can get to the close of the day, are the most valid prices to make your buying and selling decisions from. In the last hour of the market makers and the large financial institutions take over the price movement from the algorithms during the day and move it to what in my opinion is the most valid prices of the day. So all right, well, thank you for coming by today. I appreciate you spending your time and investing your time with me. Hope you're learning something from this channel, and I just appreciate you being here. So all right, let's take a look, make sure we're coming through loud and clear. Brian 5512 says, I've been waiting for this all day. Oh, good. Thanks, Brian. I appreciate it. And thank you for coming by. Is this your first time here? At least I think it's your first time you said hi. So thank you so much for that. We have had quite an interesting day, to say the least. We were up in triple digits. I think we were up about 300 points earlier today, and now we're down 269 points. So 600 point swing, no big deal. It was only the amount that the stock market went down in 1987. But all right, let's take a look. All right, William is here. Hey, William, how you doing? Hi, Greg. Got your message. Thanks for sharing those videos. Yeah, I shared some videos from Bill Williams about fractals to the other William, our William. And so, if you watch those, let me know what you think. It's pretty interesting. JT is here. Hey, what's going on, JT? Good to see you. Thank you for coming by. Hey, guess what? Dr. Jorgensen, who is in the chat with us, Dr. J, he is actually right here sitting next to me today. He's doing a little trip, and he stopped up in Utah to say hello. And so he's going to be here in the flesh today. So it's kind of nice. It's been our first guest ever since the podcast. He is actually making his way over to Pakistan. He's going to be riding around on his motorcycle for a month, Bruce? About a month over in Pakistan. So we'll all wish him well. Hope he has a good adventure and safe and everything over there. Hey, Murat here. Oh, Murat T is here. Hey, buddy, what's going on? Good to see you. Thanks for checking in from Norway. Brian says, I'm just getting started into stock trading. Well, you know what, Brian? In my opinion, somebody that is just getting started into stock trading has a huge advantage over somebody who's been trading for years, to be honest with you. It's like playing golf. If you've played golf for 10 years and you just kind of hacked it up, you have a lot of bad habits, then you go to a professional and then you try to unlearn all your bad habits, it's tough. But if you take somebody that's never golfed and they get with a golf instructor and they learn the right thing from the very beginning, I think they have an advantage. Wouldn't you say so, Bruce? Yep. Bruce is a big golfer. So that is an advantage, Brian, of being a new trader. If you learn trading principles correctly the first time and you don't have to unlearn any bad habits, I think that's a big advantage. So Brian says, I'm trying to learn as much as possible before I turn 18. Holy smokes. Good for you, buddy. Man, that's awesome. I'm proud of you at such a young age wanting to do this. In investments, the biggest advantage anyone has is time on your side with compounding interest. And, if you have an interest of this at your age and you actually start putting money away each month, you don't have to take a lot of risks. And by the time you retire, if you do it consistently, you're going to have a lot of money. So you remind me of me. I was like that when I was 18. So, all right. So listen, the plan for today, the format for today, first of all, we're going to go ahead and we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at my positions. We're going to look at when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. After that, we're going to come back. We're going to just do a few minutes on some trader psychology. And then we're going to go down through my watch list. We're going to go through each stock one by one. We're going to take a look at the technical levels, resistance, support, ATR channels, moving averages, MACD, RSI, and we're going to look and see if we can find a good potential entry for today. You know, if you've been following this channel, you know that I like to look for a combination of signals. Each signal I look at, each technical indicator I look at as a group of buyers coming in. So if I can get 2, 3, 4 signals at the same time, I know that there's 2 or 3 or 4 potential groups of buyers coming in. And if you want to buy something, you want it to go up, you want other buyers coming in at the same time. And then after that, after the market closes, if you guys have any questions whatsoever, please let me know. I'll do my best to answer them. If you want me to take a look at any potential stock symbols, I will do that as well. So that's the plan for today. And so hold tight. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, everybody, thanks for holding through that with me. So, man, Brian, I'm so glad you're here at such a young age. So if you have any questions, you just let me know, all right? Okay, well, let's get down to business, and we'll see what's happening today. Like I said, we've had a crazy day today. I am glad to say that it is a green day, which, you know, on this kind of day means a lot. So first of all, let's start off with IWM. IWM is the Russell 2000. I did buy a partial position of IWM back on the 28th of June. I bought it when the 10 crossed over the 50. This is a mechanical trade. This is a robot trade. Instead of taking a full position, however, I did take a half position here. And the reason I took a half is because we were outside of the channel, the -1 ATR channel. Once you get above here, you're pulling the rubber band a little tight, but still I wanted to adhere to the entry signal. But instead of taking a full position, I took a half. Next day we gapped up nicely. I was able to exit 25% of the position on that huge gap up. Ever since then, however, it moved back down, moved sideways. I was able to scale out of about another 30% on some of these up moves. But then back here on the 23rd of July, I did add my second position because we had another valid setup. We had a V2 setup within the value zone. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1. Day 3 closes above day 1. And you can see that was a good place to re-enter. I think we hit 3 profit targets the very next day, some more profit targets here, some more profit targets there. Yesterday we hit a profit target. We actually hit 1 profit target today before we had the huge reversal, so that's good. So at this point, I only have about 30% of the position left. So this is a mechanical trade. This is a robot trade. So I'm going to just trade this mechanically. Until either the 10 crosses back below the 50. That will be my signal to exit, or if we continue back up, I'll just continue to scale until I'm out of the positions. But you know, there's not a lot of emotion for me in this trade because of all the scaling out. If I had the full position, you know, today would hurt, but that's one of the reasons why I really like to scale out of a position. I like to take some chips off the table, sell a percentage of the shares of stock while the market gives it to me, because you never really know what's going to happen. So that's the plan on IWM. Just going to stay in this trade until the 10 crosses back below the 50, or it continues up and I run out of shares. You can see it okay? Okay, so that's IWM. Okay, Merck. So I did buy Merck yesterday. This was kind of a unusual trade for me, but there's a few things that were going on that I liked. Here we had a fractal 3 4 days before. Where a fractal, we have a high with two lower highs to the left, two lower highs to the right. It signaled, it triggered the fractal inside the value zone, which I do like. I didn't buy it here. I bought it yesterday. But the reason I bought it yesterday was because we were holding the previous support of these previous highs that used to be resistance. So, when you have a high and it goes down, then when you finally break above it, above that resistance, now it becomes support. And yesterday it did hold the support. We had a 520 crossover. MACD went positive, and really what kind of pushed me off the fence on this one was that it was very, very slightly down on a day where the market was down huge, and so it had some good relative strength. So taking that all into consideration, I did buy Merck yesterday at 82.99. You can see I hit 2 profit targets today, got one right at the very top. So I'm out right now of about 22% of the position on this move up. So again, when the market moves up, I'll take a percentage of my shares off. It was higher today, obviously, but it is still up today. So it has been a nice profitable trade, especially considering the Dow is down 267 points right now. So that's what we're doing on Merck. Going forward, we have to look what's going to be my initial stop. We have moved up. We haven't really moved more than one ATR from entry. I guess close, but you could either use the 5 moving average here, the 5 EMA as your trailing stop, but I think it's a little too close still, and I like the confluence of all these moving averages here. You have the 10, you have the 5, you have the 50. You're still above the 50 RSI. MACD still positive, so I am going to give this a little bit of room, especially being that even today on a huge down day, we're still up. So it's showing some pretty good strength. And, relative strength is one of the indicators that I also look at. It's actually the one that tipped me over to go long into this trade. So we're doing well on Merck. So we'll just see what happens. Okay, SPY. All right. Well, as many of you know, I do buy the SPY each day at the close of the market, and then I sell it first thing in the morning. And I did do that yesterday. I bought it yesterday at the close at 297.43, and I actually sold it this morning for a slight profit at 297.66. So you might ask yourself, why would you buy that? That doesn't seem very technical. It doesn't seem like there's a lot of thought going into that. And on the surface, you are correct. But let me show you why. This is based upon a back study from Liz Ann Saunders at Bespoke Invest on Twitter. But you have two options with this. You can do the opposite of what I do, which is you buy the SPY at the open each day and you sell it each day at the close. If you would have done this since 1993, you'd have actually returned a negative 13.9%. But if you do the opposite of that, which is what I do every day, is I buy the SPY at the close each day and then I sell it at the next open the next day in the morning. And I do that every day. And if you would have used this approach, the approach that I use, from 1993, you would have actually returned 634.2% since 1993. So buy in the morning, sell in the afternoon, negative 13.9%, or buy in the afternoon, sell in the morning, a positive 634.2%. So this means that all the gains in the S&P have actually come in the after hours and the pre-market session, not during the regular trading day. So you can see the chart here. The after hours since 1993 has had a huge edge using this approach, and the open to the close, the buy in the morning, sell in the afternoon, not so hot. So there, I do this every day. This approach, like any approach, has drawdowns. It's just a normal part of trading. So be careful. position size correctly. I use a 10% position size each day. So if I have like $100,000 in my account, I would buy $10,000 worth of S&P. So it's just a small percentage of all my other positions that I use with this particular approach. So you can see this morning when I got up, when the market was up here, I was like, dang it. Oh well, at least I got a little overnight profit. But then, President Trump came out today, said he was imposing some additional tariffs on China, and that is what drove the market down. So obviously, in hindsight, I'm really glad I got out where I got out. I will be buying this again today at the close, per usual. So we are off the lows, which is good. So that is SPY. All right. All right, here is VIX. Well. So I did buy VIX back here on the 25th of July, and the reason that I bought it, we had a combination of signals. First of all, we had a V2 signal. Here is day 1, day 2, day 3. Day 2 washes out day 1, goes below day 1. Day 3 closes above day 1. That is a V2 signal. In addition to that, the previous day we closed below the 30 RSI. Next day when we bought it, it closed above. We closed below the third ATR channel. Next day when we bought it, it closed above. I bought it, immediately went against me the next day, but as you can see, some volatility came into the market. I did hit 5 profit targets yesterday on that huge move up. Earlier in the day, it wasn't looking so hot, but you can see it reversed, and we hit 1, 2, 3, 4, 5 profit targets today on the VIX. I am now out of the position. I ran out of shares. So this was a great trade from entry to the very top. It was about 15.46% in 2 days. Now, I didn't get 15.46% because I do scale out. But I don't know exactly at the moment what the amount, the net amount was, but it was good. It was a lot. And, yesterday it really mitigated the damage from yesterday's long positions. And today, it was a really nice profit. So I'm out of the position here. As far as re-entering, now it's a little extended. Doesn't mean it's not going to go higher. But I think we got the meat of this, but who knows, it could go up another 10% tomorrow, and that's fine. I mean, we got what we were looking for out of this trade. All right. So Brian says, all righty, will do. Okay, good. All right. So listen, before we get on to taking a look at the charts, I do want to just do a few minutes on some trading psychology. As you know, I believe trading psychology really is the difference between whether or not you're going to be a winning trader or a losing trader over time. It really depends on what's going on in your mind and the decisions you make. But this is from our friend Trading Composure on Twitter at YVANBYEAJEE. On Twitter. He has a great channel. He posts, words of wisdom about trading psychology every day. So I do follow him every day, and I would suggest the same. But he says, whenever the human mind perceives a loss, psychological pain is inevitably arises. If you know what pain really is at its core, if you know how to deal with it when it arises, then it won't have the power to destabilize you and detract you from your plan. And in regards to trading, I mean, this could be applied to all areas of life, but in regards to trading, what he's saying is that when you have a loss, there's psychological pain, right? And when you have psychological pain, then it can negatively affect your trading and your approach and your process. So the takeaway that I get from this is you really have to be okay with the loss, your potential loss. When you get into a trade setup, you look at your potential stop loss, you look at your potential maximum risk. A lot of people say, oh, I'm okay with that risk, but in reality, they're really not, because they don't really think that stop loss is going to get hit. So, I'm big on position sizing and position sizing small, because you literally have to be okay with the full amount of your stop loss to take the emotion out of the trade. So, if you have a huge position and it goes against you, you might say, oh, I'm okay with a 5% maximum loss, but in reality, maybe you're not. So, think about that. And if you're really not okay with all of your stops being hit in one day and what kind of damage that would do to your account, then just trade smaller. Because if you trade smaller, you're going to have less emotions and you're going to stick with your plan. But one more time, whenever the human mind perceives a loss, psychological pain inevitably arises. If you know what pain really is at its core, if you know how to deal with it when it arises, then it won't have the power to destabilize you and detract you from your plan. So position size correctly so that if you do get the loss, it doesn't have the power to destabilize you and detract from your plan. So again, from Trading Composure on Twitter, it's a great channel. I highly recommend that you follow him on Twitter. All right. All right. Max B is here. Hey, buddy. Good to see you. Thank you for coming by. Max says, I feel really sick from unpredictable moves out of nowhere, like FMOC was expected, but today's drop was a blindside. Yeah, you are correct. Didn't even lose much as I was waiting to add at the end of the day, but being so wrong feels so bad. Yeah, it's true. It's true, Max, and it just kind of goes back to what I just said. The only control you have in this market whatsoever, the only control is how many shares you buy. After you buy those shares, anything can happen, as you can see today. So always keep that in mind. Remember today, and try to remember that anything can happen. So buy a conservative position size, because it's the only control you have in the market. Okay. Well, let's get down to business here and see if we have any potentials for the end of the day. All right, here we go. So, Apple. All right, so Apple, we had that huge gap up on earnings. We moved up much, much higher today. We've just had a monster day to the downside. Down $4, down close to 2%. So, we are getting back into the value zone. This was a big stone, a big boulder that was thrown into the water. It's caused a lot of commotion, a lot of emotional commotion, and that's why we're seeing these big moves. I'm going to be watching Apple. I mean, now we're back into the value zone, but at some point I need some kind of trigger before I can get into the trade. I just can't anticipate this. I want, either a rejection of the 20-day moving average, possibly a V1, V2, maybe a rejection under back over the 50 RSI, something like that. So nothing on Apple today. It's very likely we could have some follow through selling tomorrow. And oh, by the way, tomorrow the unemployment numbers come out. That's I think that's going to be closely watched. So let's be careful with these news events and all this emotion that's in the market right now. So nothing on Apple today. Silver gapped down and reversed. Oh, just give me 1 second. Today did trigger a V1. As you can see, here's day one, day two washes out day one, close. It looks like it's going to close above day one, but we're to 61.92 RSI. We're outside of the channel. It's just too high for me here. Doesn't offer a good risk reward. Back we took a trade back here on the 10th of July. Was a mechanical trade when we had the 5 crossover. The 20 happened in the value zone. This offered a much greater risk to reward for us. We did enter here, and it was a mechanical trade where we stay in it as long as the 5 stays above the 20. If the 5 closed below the 20, I'd get out for a small loss. This is a good back-tested crossover approach, but this was a great trade. We bought here, we scaled all the way out to here, and just like VIX, I ran out of shares right up here, but that was fine, and that was the meat of the move. So nothing today on silver. Hey, Steve Burns is here. Thank you for coming, Steve. Hey, I got your email with the book. I'm going to share it. I hope that's okay. Not the email, but the book cover today, and what you wrote on it. I think people would like to see that. I'm proud of you. That's great. Steve says, this is the type of market you can have FOMO in the morning and be glad to be cash in the afternoon. Boy, if there was ever a day with that, I'm sure. I'm sure you went through a little bit of that today. I know Steve went flat yesterday, which this morning, like me, I was thinking, dang, I wish I hadn't sold those positions. But obviously now I'm really, really glad, and I'm sure Steve is too. So Steve's going to be stocking the market and looking for some good dips. Thanks for coming, Steve. It's always an honor to have you here. I really mean that. I know I say that every day, but you know, when you get someone like Steve, who's a famous author and trader and mentor and teacher, and educator, I mean, I feel honored when he's here in our group. So thanks for coming, Steve. Johnny says, hey, bud, how you doing? I had 5 stop losses hit today. Ooh. Only one had a slight rebound, so I guess good, I am out of those. My only regret is buying before the drop today. Yeah, well, some days you're going to buy, some days you're going to wish you had bought earlier, and then some days you're going to wish you waited till the end of the day. You know, that's generally why I like to wait till the end of the day, not because it's always going to be right, but it just gives me a rule to follow, and it makes my life easier. If I could buy anytime, anywhere I wanted, then I'd always be thinking about buying. You know, waiting till the end of the day, that's just my rule. But sorry about that, Johnny. But you know, nobody could see this coming. You know, just kind of came out of nowhere. But like I mentioned earlier, you know, the only control you have in this market is your position size. That is it. When you distill it down, that is it. So, you know, always err on the side of a smaller position size, because the longer, you know, it's going to keep you in the game longer, and the longer you're in the game, the better trader you're going to be. All right. So silver, nothing on silver. Advanced micro devices. Well, you know, we were waiting for this to come back into earnings, and we had, into the value zone. We had earnings. It dropped hard yesterday. It attempted to rally earlier today, and it's dropped hard again today. So, you know, would I be buying anything here today? No, I don't think so. What I would really like to see is I'd like to see us move down below the 100-day moving average and then be able to close back above. Have the sellers test this area down here. If they don't like it and it reverses, then at least it gives me some kind of idea that this area was tested and didn't like it. And if we do go below the 100-day, we're going to get close to a very low RSI. So that would be a nice confluence of signals at the same time. So I'm definitely going to be watching this for sure, but nothing on advanced micro today. Amazon, you know, Amazon's down, but not too bad considering what the market is down. So now we're only down 212. I'm not going to buy this today. It did get to a pretty low RSI. So this is how I'm going to look at Amazon. If we can go under the 30 RSI and then close back above, that will be one buy signal. If we can close back above the 100-day, that would be my buy signal to the upside. So, but right now, as it is, I just want to wait to get a little bit more confirmation that either it goes down and reverses or is able to go back up. So that's my plan on Amazon. Nothing today. Boeing. Oh, well, Boeing got beat up today. It's down at the third ATR channel. Generally, when you get down to the bottom of this third ATR channel, it's more likely, I think, that you're going to go up than down. But just because we're there, you just don't buy it sight unseen. I need some kind of trigger. You know, a close under the third, close back over might be one. A close under the 30, close back above the 30 might be one. So, you know, be patient. Just because something starting to get into an area where it looks good doesn't mean you just go ahead and buy it. You need some kind of trigger to get you in. But I would love to see this go under the 30 RSI, under the third ATR channel, and then close back above both of them. So that is how I'm looking at Boeing right now, but nothing today. Okay, here's Alibaba. Oof. All right, so Alibaba really did take it on the chin today. It's down 4.5%. You know, this is an interesting one. We did go below the 200-day moving average. We closed back above the 200-day moving average. This is, you know, this is a legitimate setup when you test below the 200 and close back above, because it would give you a good risk to reward ratio here. But you know, you have to look at the nuances, and this bar to me is just looks too big to get in front of this. I mean, it's possible that we could rally halfway back here, but I would like to see this move sideways, stabilize a little bit before I get in. But again, you know, because it went under the 200 and back over the 200, and you have a good risk to reward ratio, if you're wrong, you know, I don't have a problem with that approach at all. But just because we have this huge bar, I mean, this bar is 4 ATR channels long. So obviously there was a lot of selling and distribution going into this bar. So I think the odds favor going down. But again, you could buy this over the 200 and just use a close below the 200 if that's how you wanted to approach it. But I'm not going to approach it that way. Caterpillar, oof, big day down. Lost the 50, lost the 200, nothing there. It's at a 38 RSI. Again, I'll be looking for some 30 RSI dip buys. DDM, oof, down, strong. We're tagging the third ATR channel. The 50 day moving average is below us. You know, we've been talking about the prices possibly pulling back to the 50-day moving average. And I think that 50-day moving average may act as some kind of magnet and pull this down here. I don't know for sure, but it's not low enough for me. There's not enough indications for me to buy this yet. This over here was a nice example of a good risk to reward ratio. The previous day we were under the 200. Next day it closed above the 200. We did buy it here. If it closed back below the 200, we would have a small risk. But if it went our way like it did, we have, you know, a multiple of our reward compared to our risk, and that's exactly what happened. So if it would have closed below, I would have gotten out, but it did indeed go our way, and I scaled all the way up to about here. So nothing on the Dow today. Disney, we are in the value zone, so if I could see this start to move sideways, start to stabilize a little bit, I would be interested, because it's in the zone, right? First of all, we need it to be in the right zone. Then we need the correct setup. Then we need an entry trigger. So we have one box checked. We need 2 more boxes checked before we can enter this, but nothing on Disney today. This is a previous trade back here. You guys know I like V1, V2s in the channel. Here's a nice V2. Here's day 1. Day 2 washes out day 1. Day 3 closes above day 1. We bought it here, and you can see the easiest movement comes within the channel up to the third ATR channel. And so that's why I like to buy things in the middle of the channel. But you can see this is a great trade. We scaled out all the way to there. Etsy, well, Etsy is up today. We do have earnings after the bell. Did trigger a V2 here today. But again, you know, my rules, I can't buy in front of earnings. So nothing on Etsy today, but we'll have to take a look at that tomorrow. Ford, oh boy. Ford lost the third ATR channel. That's never good. We are at a 32.94 RSI, so we are getting really down there. You know, we might have a 30 RSI right down here at about 914, and that would coincide with the previous day's low. So that might be a good confluence of indicators lining up, but it's not quite there. So, you know, if it's not quite there, just wait till it gets there. Johnny says, funny thing about those stop losses was my net was still green on those 5. Oh, okay, that is a silver lining. Nice. Hey, Mount Doji's here. Good to see you, Mount Doji. Thanks for coming, bud. Mount Doji, you still have your VIX? Your T-VIX? Murat says, in Boeing, there is a large sell momentum right now. You don't like larger Mac red bar following the previous one. No, I don't. But if you get to a 30 RSI, under the 30 RSI and back above, you know, to me, that's a standalone indicator. But we'll see what happens. Facebook, boy, you know, I had all these potential buy signals set up for you guys today. Earlier, we had a nice V2, day 1, day 2, and you can see intraday it was above day 1. But, you know, I have to wait till the end of the day to tell me whether or not it's going to confirm, and it certainly has not confirmed today. So nothing on Facebook today. 5 Below down 5.84%. Unbelievable. You know, this is another reason, guys, if you're in above the 200 and you stop below the 200, it's never fun, but it may prevent you from dealing with a situation like this. So right now we're under 30 RSI. So nothing on 5 Below. Gold has a bullish engulfing candle to the upside. Means we went below and above the previous day's highs and lows. It's a 60 RSI. A lot of volume coming in today. I mean, I think it's very bullish, but for me, it's outside of where I want to buy. It's outside of the channel. The further you get outside of the channel, the more the rubber band pulls. So I'm not going to buy this today. This is an example, just like on silver, we had the 520 EMA cross. This was another mechanical cross. I took a full position because it triggered in the value zone, and you can see this was a nice, great trade we had all the way up to here, ran out of shares up here. So nothing on gold today, although it is, you know, it is very strong, and it certainly could go back and make higher highs, or make an all-time high, but you know, I feel like it's a little chasey here. There's a little FOMO going on, but we did have a V2, but again, it just doesn't fit my parameters. Google is hanging in there. It's only down $2.12. We had that big gap up on earnings, but this is too high RSI wise over here, and it's too high with the channels. Goldman Sachs, big down day today. Boy, oh boy, you know, we had this nice big run up. We were waiting for it to come back into the value zone. Well, it is here. It is in the value zone. But now, just because it's in the value zone doesn't mean you just go ahead and buy it, because this bar is about 2.25 ATR, or maybe even larger long. So there was a lot of selling, a lot of distribution. You can see the momentum on the MACD immediately went down. I need this to start consolidating, settling down, moving sideways, and then looking for some kind of entry, but nothing on Goldman Sachs today. IBB. So IBB, I was looking for a trade, a mechanical crossover on IBB. You know, I've been talking about this for a bit. Today, when it was at the top, the crossover had happened. This is the 530 exponential moving crossover. When it was at its high, the 5 was above the 30, but right now it is still not. So this would be a mechanical trade. This would be a robot trade. So I am going to buy this eventually when the 5 crosses over the 50. I don't know if it will be today. I kind of doubt it, but you know, maybe next week. I have a feeling if we continue to move up, I'll enter this trade. But nothing here today. Intel, well, you know, we had this big strong move up. We had this reversal bar here. Next day we rallied only to the halfway on lower volume, and that was it. 3 days strong down. However, we are in the value zone. I do think in the coming days or weeks, I think we are going to be able to find a good entry on this dip, right? So it's nice to buy the dips as long as you have a valid signal. So we'll see what happens. So this could either move sideways, we could get a V1, V2, or the 200-day moving average down here would also be a really, really nice area to buy this as well. So we'll keep our eye on Intel, but nothing today. IWM, we talked about that. We bought that with the 1050 cross. We added a second position here on this nice V2. Did hit one profit target today, but huge reversal. But this is a robot trade, guys, so just going to trade this mechanically either to the upside or the downside. Johnson & Johnson is currently working on a V2 to the upside. This would be a higher low V2. Tell you though, the best V2 or the best higher low V1s or V2s come within the channel, and we are currently below the channel right now. This may trigger here, but I don't think I'm going to buy this. I think I'm going to wait until I get a signal into the value zone. But this, this is a valid, if it closes above yesterday's low, this is a valid higher low V2. But again, I like it in the channel. Right now, that channel is still above us. It's still going to act as some resistance. Coca-Cola. Big move up, down into the value zone. Hey, Andy's here. Good to see you, Andy. Thanks for coming by. It is down today. It's not down too bad, but we are in the value zone. So this could present a good buying opportunity for us possibly next week. It is holding the 50 RSI. Some people could go in here and say, okay, I'm going to buy this if it closes above 50, and then any close below 50, I'll go ahead and just get out. I mean, that's fine. Some people trade like that, but it's more of an anticipation trade. You're just anticipating that it's not going to go down instead of it going down and reversing and actually showing you it doesn't like the prices down there. Lockheed Martin, strange pattern here, isn't it? Earlier in the day, it was a V2, day 1, day 2, day 3, day 2 washes out day 1, and we were above day 1's close, but only intraday, right? But I wait till the end of the day. Nothing on Lockheed Martin. Nothing on Lockheed Martin today. MasterCard is actually up today. And earlier in the day, we had a V2. See, here's day 1, day 2, thoroughly washed out day 1. And earlier in the day, we were above day 1's close, but we've come off of that. So nothing here. I'm just going to have to wait for a valid signal. Merck, of course, we did buy that yesterday. We triggered that fractal the day before yesterday. We entered it yesterday, but the day before that, it triggered the fractal, reverse back. I didn't like the movement on that, but yesterday we did hold the highs of the previous range, acted as support. And then we had a crossover. We have all these moving averages below us. We had a MACD crossover, so this all looked good. We did hit 2 profit targets today, so my stop is going to be a close below this cluster of moving averages going forward, or I'll just continue to scale out. Microsoft is up. Wow, unbelievable. Look at yesterday's bar, unbelievable. And then we were much higher today. Again, we triggered a V2. I wouldn't take it because it was outside of the channel, but pretty good relative strength on Microsoft here today, but nothing. Netflix, I was considering buying today because of this. You see, earlier in the day, we had a higher low V2 that rejected the third ATR channel yesterday. And if it would have closed, if it would have done this today, let me move this bar. If it would have closed like this, where you have a valid V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. And yesterday being that we closed under the channel. That might have been interesting for me, but currently it lost it, and currently it looks like it's below the third ATR channel. So nothing on Netflix, but we'll just keep patient and we'll look for something. Nike got whooped up on today because of the tariff news. It's a 36.63 RSI. You know, I would be possibly looking to buy Nike down here, maybe at the 200. That might be a good entry, or a close under the 30 back over. But, you know, it's getting interesting, but it's not quite there. So again, let the trade come to you. Philip Morris back in the value zone is sort of holding here. So again, we can get some sidewards movement, some consolidation, V1, V2 entry, maybe a close under the 100 and then back over in addition to a V1, V2 entry. That would be good, or possibly even, you know, another dip down here to the 200. PayPal. Well, this is a tough one. This is a tough one. We entered this a couple days ago when we went under the 100, under the third ATR channel, and closed back over, creating that V1. I thought that was a good signal. Yesterday, however, it went under the 100 days, so I decided to just let it go. We're slightly higher than yesterday's close by a little bit, but we did reject that. We did reject that 5-day moving exponential moving average to the upside. Yeah, this one's kind of conflicting. I mean, you could buy this with a close back over the 100-day moving average. That would be a possibility, but at the very least. But I don't think I'm going to do anything with PayPal today. The Qs, back in the value zone, big bars. I just don't want to get involved with that. I need a better risk to reward ratio. You know, we did buy the Qs back here. Speaking of good risk to reward ratios, we bought this back on June 4th when the previous day we went under the 200. We closed under the 200 day. We closed under the 30 ATR channel. We closed under the 30 RSI. The very next day we closed above the 200, closed above the 30 RSI, closed above the 30 ATR channel, and also giving us a very good risk to reward in the coming days if we were wrong. So if it would have closed below the 200, I would have gone ahead, just taken a small loss, waited for a new entry. But you can see this was a great trade for us. We were patient. We scaled out. We scaled out. We scaled out. I think we scaled out all the way over to here. So that was a great trade. And this is a good example of having a good risk to reward ratio. But right here, it's just too volatile. All right, Snapchat. Nothing there. The SPY, again, we're going to buy that at the end of the day. Square is up slightly today. Just too high there. Bonds having a huge day because of the rate cut yesterday, and then also, you know, it's a flight to safety after President Trump's tweet today. It's 68.69 RSI. It looked like it was over the 70 at one point, so nothing on bonds. Tesla is down today. You know, I talked yesterday about when we got into this area, it was halfway of this move. It was looking a little shorty, and it is shorty. And is a V2 to the downside, right? Here's day one, day two washes out day one, day three is definitely closing below day one. So I'm not going to short this, but I did want to just point out that when you have big moves that come from a high down to a low, and then you rally back, whether it's on one bar or a cluster of bars, you're still getting into that 50% fib number, and that's exactly what happens. So, you know, this is setting up for a potential nice higher low V1 back up to the upside, but nothing on Tesla today. Twitter is down today. Boy, look at natural gas. Boy, whenever natural gas goes up, something always pounds it back down. You see this bar? Unbelievable. Unbelievable. So nothing on natural gas. United Health Group, we did buy that back on the 26th of July when we had the close under, close back over the 200. Moved up our way a little bit and then collapsed yesterday. We did have to get out, but it is down even more today. So, we might want to look at this again if it closes back above the 200. Oil had a huge day down again on the Trump tweet tariff. It's a 39.41 RSI. I don't want to get involved there. The dollar gapped up higher. It's right up near that 6 ATR channel. So, when you get up to this 6 ATR channel, you're really pulling the rubber band tight. So, this still could go up, but I think odds are that it's close to its high, but I'm not going to do anything there. VIX, I am out of the VIX. As you know, I scaled out of 5 profit targets today. Literally hit my profit target. See the pink line up here? That was it. But I scaled out, so I am completely out. But that was one monster of a trade. And again, I took it because of the V2. The previous day was under the third ATR channel. It was under the 30. Next day, went back above both of them. Also, had a double bottom with a bullish divergence. You have this strong move down identified by these strong MACD bars. We had a rally, we came back down, we went lower. Even though we were lower, the MACD readings were less, showing that momentum was less. So taking this all into consideration, that is why I did buy here, and that's been a really, really great trade, but I am now out of the trade. Verizon, oh boy. So it looks like Verizon had decent earnings, at least. I mean, look at this gap from here to here and all the way back down. My goodness. Yeah. Another reason to point out, it's a good idea to wait till the end of the day to make your decisions. Walmart. Walmart was looking really good. We moved up, we moved back into value, we moved sideways, but we just didn't get a trigger. Actually, earlier today, we did have a trigger intraday. See this V2, day one, day two thoroughly washes out day one. And at one point today, we were above day one's close. If it would have closed there, I would have considered buying that. But again, I'm an end of day trader, so I wait till the end. So now you have to look at this a totally different way. Now we're down to the 50 moving average, which, is kind of what I was waiting for if we hadn't had a V2. It didn't really thoroughly reject the 50-day. It's at a 37.77 RSI. One could go ahead if they wanted to. I'm not recommending it, but I'm just pointing it out that, if you bought here at the end of the day and you got out with a close below the 50, it does give you a good risk to reward ratio, but I don't like the huge move and the huge volume that came in. So I'm just going to be a little bit more conservative on this, see if we can close below and then back over. That would be a better entry. And again, we have the jobs report tomorrow. So, that's going to add some more volatility to it. So I'm just going to be a little conservative here. Energy, big move down today. Oh geez, I only got 6 minutes. All right, financials. Financials moving down. There is some support down here. We'll look at that. Real estate, nothing there. Utilities. So this is about the only thing that looks good to me today, guys, is the utility sector. We moved down, we bounced here, we made a lower high, but yesterday we washed out the lows, which is required. Mount Doji, this is another example. Today though, we have a nice V2. We have day one, day two, day three. Day two washes out day one. Day three, it looks like it's going to close above day one's close. We also rejected the -1 ATR channel. It's a 49.96, but it's pretty close. But obviously I would like it a little better if it did close above the 50. But all in all, I still like this. Nice, beautiful V2, rejected the 50-day moving average, rejected the one ATR channel and up today as well. So, you know, if I'm wrong on this trade, where would I be wrong? Probably about halfway of this bar. You could also use the 50, but the correct way on these V2s would be halfway of the washout bar, which would be about here. So, but we do have some good upside potential on the weekly. I like that we're back in the value zone. Even if I have a good V1, if it's up against the third ATR channel on the weekly, that concerns me. So I do have an order in. I'm going to buy a full position here at the end of the day, as long as the price closes above 2 days ago at 59.83. So this will be an entry for me today. XLV did have a nice V1 at one point today, but of course it's reversed, so nothing there. And pharmaceuticals, nothing there. All right, so again, on Amazon, I'm going to be looking for this under 30 back over. So nothing on Amazon. Alibaba, again, you know, somebody wanted to take this over the 200. That would be legitimate, but I don't like the trade because of the big, huge bar. So nothing on Baba. Facebook, nothing. IBB, we better check that again. No, not quite the crossover. J&J, very close to triggering a V1, but a higher low V1, but it's underneath the channel, so I'm going to let that one go. PayPal, still under the 100-day. Hold on, everybody. Pull the cord out of the puppy issues. XLU does look good, and healthcare does look good. So that leaves one potential, or one position today. So let's quickly go back over. Okay, so I've already got those in, so they are going to buy at the end of the day, as long as the SPY. Merck is fine. Then we'll buy SPY again at the end, and then VIX I am out of. So pretty light, everybody. So we're going to end up the day with the current positions of Russell 2000, IWM, Merck, which is profitable, SPY, which was profitable overnight. We'll buy that again at the end of the day. And then we have an order in to buy utilities here. Steve says VIX finally had the 10-30-day crossover. And what Steve's talking about here, he's talking about this back-tested approach to actually shorting volatility from Larry Connors. And when the 10 crosses over the 30, that is a signal for volatility in the market. So when the 10 is under the 30 on the VIX, it's generally a good time to buy stocks. When the 10 crosses back over, it's generally bad time, because it shows that volatility is picking up based upon this back test. So yeah, we will see what happens, but it's not a good sign. It's not a good sign for the market. I mean, we're not predicting it's going down or anything like that, but just based upon that back test. Thanks for pointing that out, Steve. Good point. Murat says, you bought PayPal after triple screen. How was the others? How were the other two screens? Oh yeah, 1 month. Well, the reason I bought it. There we go. That's the market. The reason I bought it was because the monthly was in a strong uptrend, and the weekly was in the value zone. So I like that situation. And then we bought the daily when we had this nice V1 rejection of the 100 days. So everything looked good. The monthly looked good. It was an uptrend. The daily looked good. It had a regular dip down into the value zone, and then I wanted to pick it up on the faster level, which is on the daily. So But yeah, we did take a loss on that yesterday. So let's see where we
Order cancelled.
We ended up here. So the Dow ended up down 281, the Nasdaq down 64, and the S&P down 26. We entered XLU. At 60.16. Right there at the close. So that was our one position today. That is my one position today at 60.16 because of the rejection of the 50 and the V1. And then the SPY 294.84. So we re-entered the SPY here. 294.84. All right, and then VIX, we scaled out of that bad boy. That was a great trade. Thank you, VIX, Mr. VIX. All right. So listen, if you have any questions about anything I did today, please don't be shy. Go ahead, type your question into the chat, and I'll do my best to answer it. And if you'd like me to look at any other positions, please just type them in there. I'm happy to do that as well. But before we get to the answers, I do want to just hurry and put in a quick plug and let everyone know that I do offer private one-on-one coaching, teaching, and mentoring lessons during the evening time via Skype. So, if you've been thinking about getting a lesson with me, I really think you'll be happy, if you do. I really like to teach. I've had good success with my clients. There's a big advantage of having a one-on-one lesson where, I teach you and then I ask you questions back. That way I really know that you like it. Also, after I teach, then we do a lot of simulation work on the chart where we go through the chart one day by one day by one day, and I have you break it down because you're hearing me break this down every day. But honestly, I'd like to hear you break it down so that I know that you know it. And if you're interested, just reach out. My email's in the description of this video. My hourly rates are in there as well, and you can also send me a message on Twitter as well. But it generally just starts with the free phone call. I just want to get to know you a little bit better, get an idea of your trading methodology, what your challenges have been, what your goals are, and then I'll put together a customized lesson plan to help you achieve those goals. So that's that. And then also, if you don't mind, if you could go ahead and hit the thumbs up button if you like this video, then I would really appreciate that. That helps get the channel out to more people. Google will promote it more, and there's a lot of people out there that need help with trading. If you saw the emails and deal with the people that I deal with, you would really see that people have a really difficult time with trading. And everyone, the emails that I get, people tell me that the channel is really helping them, and I'm really glad to hear that. But help me get more people to the channel. If you could hit the thumbs up button, I would appreciate it. So, all right, well, that's my plug, and let's get on to see if we have any questions. Hey, Mount Doji, you came a little late. I don't know if you heard, but Bruce Jorgensen, Dr. Jorgensen, is here with me right now. He's sitting right next to me. He's up in Utah. He's on his way over to Pakistan. He's going to be putting around there on his motorcycle on a big tour. So he dropped by today, so it's nice to have him. And I think I said this earlier, but maybe we could all wish him well on his trip. Have a safe, fun journey. So say hello, Bruce.
Hello.
There we go. All right. So Murat, I hope that answered your question. I wasn't really clear. You bought PayPal after triple screen. How were the other two screens? So the monthly was in an uptrend. The weekly was in a dip into the value zone, and that's why I bought on the daily. Mount Doji says, wow, look at the RSI that XLU finished at. 50.59. That's perfect. I was going to buy it anyway, but it did. But that's a cherry on top for sure. Damn, XLU just dropped hard. It did? That's not good. XLU. I can't read. Oh, I don't think that's a correct reading, Mount Doji. The price closed at 60.16. I see in extended hours it's 59.54, but if you look, the bid is still 60.14 and the ask is 60.19. So I think that was a bad tick, Mount Doji, because I understand exactly what you're saying, but the bid and the ask are right there where we entered the trade. Does that make sense? Mount Doji says IBB keeps getting rejected intraday. It seems, yeah. So we were looking for that. We were looking for that the 530 cross. It just didn't happen today. Earlier today, you can see, because I can move the bar up, you can see that when it was at its high, the 5 was across the 30. But being that I wait till the end of the day to get a better confirmation, you can see it didn't happen yet. So maybe it will happen tomorrow. Maybe we'll get a worse fill. Who knows? Mount Doji says, bad tick. Good to know. Yeah, I know. That's always scary though, right? Mount Doji says, I'm glad you're seeing what I'm seeing. Yep. Mount Doji, so cool. Dr. Jorgensen is there with you. I know. It's pretty awesome. We went out to dinner last night. God, we went out dancing, strip clubs. Oh, wait, no, we didn't do any of that. We just went to dinner. Brian says, what do you recommend me on doing so I can learn more trading terms? Because some of the things you are saying make me confused. Some of the things I say make me confused as well, Brian. So, Brian, there are a lot of good books out there to read. Yeah, for sure. Steve Burns. Actually, listen, if you go to the description of my video, of this particular video, there's two things I want you to look at there. I have a list of all my recommended books, a lot of them from Steve Burns. Anything that Steve Burns, I would start with that. But if you go to the description of this video, you will see all my recommended books that I recommend people to read, and then the links. And then also in that description, I have 4 video lessons that I made on YouTube that talk about all the stuff we do every day here. And I know if it's your first exposure to this, it seems like there's a lot going on. But if you watch all 4 of those videos, I concentrate on very specific, my different kind of entries, my X's, my V1, V2 entries, my chart indicators. So I would recommend that you watch all 4 of those videos. If you have any questions, please let me know. And then also in the description are the links to my recommended reading list. And, I probably would start with Moving Averages 101. You'll see a link down there. That's from Steve Burns. So to me, that's probably one of the most helpful trading books I've ever read. So I would start with that. And listen, speaking of Steve Burns, you can see here, this is a new book by Larry Hite. Larry Hite's a very well-known trader, market wizard, and he just put out a new book called The Rule: How I Beat the Odds in the Markets and in Life, and How You Can Too. He's the founder of Mint Investments. If you guys if you've ever listened to Market Wizards, Larry Hite is featured in that. It's such a great interview. And also Market Wizards, the book is in the link. The description is in this video. But Larry Hite, his whole world in trading revolves around risk, managing risk. And I took note of that when I listened to that. So listen to Market Wizards, listen to that interview, but this is the new book, The Rule: How I Beat the Odds in the Markets and in Life, and How You Can Too. And I think what's really, really cool is that Larry Hite reached out to Steve Burns, our friend Steve Burns, to have him write a little, what would you call this? A little review I guess, a little review of the book. And Steve says here, in addition to sharing phenomenal wisdom and excellent trading principles, the book chronicles Larry's life story from underdog to the highest level of success. The principles he generously shares can improve your personal and trading life. And so isn't that cool that Larry Hite reached out to Steve Burns for a review? That's great. And look at the company Steve's in. Jack Schwager, Mark Menavini, Tom Basso, Adam Koo. So the empowering story of Larry Hite's unlikely rise to the top of the hedge fund world with critical insight and lessons you can take to the bank. So, when somebody like Larry Hite puts out information, probably a good idea maybe to pick up this book and take a look. But congratulations to Steve Burns for being asked to be on that book. I mean, boy, he's right there at the top in this company. So congratulations, Steve. Mount Doji says the 530 was there before Fed, before Trump. Yep, that's right. But again, Mount Doji, that's why it's good to wait till the end of the day to get the confirmation. Thoughts on XLRE? Oh, and Murat says he can start with Investopedia to check different terms. Oh, that's a good suggestion, Murat, for sure. Yeah. Did you hear that, Brian? Go to Investopedia, which is a good site, and look at the terms so you kind of know what everything means. But again, if you have any questions, Brian, not sure something, you can just email me, no problem. Let's look at XLRE. So, okay, I mean, yesterday we did have a 520 crossover. That's good. You can see we had the negative, we had the bearish V1 yesterday. Today, however, we did confirm the triangle. What I don't like about this Mount Doji is that when those triangles confirm, I like it better when they confirm above the point. See, here you have a high, we go up, we reverse back up, we close under the high. So it painted the triangle. Today, because it went over the high, it is confirming. But I would like it better if today would have actually closed over that high. So, splitting hairs, I don't know, but I don't think, I mean, it's okay. It's okay. But as you can see, I didn't buy it today. I did notice this, but I noticed that it closed underneath. So, but the 5 crossed over the 20, MACD is getting close to crossing over. So it's a little, there's some conflicting signs here for me. Johnny says, I consider today to be my trading birthday. I started a year ago with my first terrible purchase on E-Trade. Well, happy birthday, Johnny. Nice. You've got 1 year under your belt. I'm sure you know a lot more now than you did when you started, right? So happy trading birthday. And Brian says, yep, I'm on it right now. Good for you. Man, I gotta say, I'm glad to announce I made a yearly high today. So good, glad for that. That was because of the VIX. So, listen, I mean, the market's having a big pullback here. We were all talking about waiting for a pullback. I mean, everything was pretty dang high, and we talked about it being high. And when you're a trader and you're being conservative and you're waiting for real positions, when you keep seeing it go up and up and up, you get that feeling like, I'm missing out on this. But most of the time you get up into that third ATR channel, and if you look back into the past, you'll go, oh yeah, it was a good idea to maybe be patient and wait for a pullback. And so we are in pullback area right now. So, we don't want to just go ahead and buy for no reason just because of pullback, but we want to see some kind of signal. Mount Doji says, this is my best trading week by far. Laugh out loud. I can't type. I'm so happy. Mount Doji, it's because of your VIX, right? It's because of your, what was that? TXX? No. TXXX? No. TVXX? No. TVIX. Thank you. It's up 14% today and 10 yesterday. So Mount Doji, what do you have? Did you scale out? Did you scale out of something? Did you keep the full position? Tell us. I got to hear this. It's up 28% in 2 days. Wow. Yep, Frank says, hey, Frank. Frank says TVIX. Come on, Mount Doji, let us know. How'd you handle this trade? Did you scale? I mean, I hope you didn't scale. Never scale. No, I'm kidding. Murat says, my peak this year was yesterday. Hit hard on one on the font. Hit hard on one of the font. Well, you had the peak yesterday, so that's good. So I think, but today not so good. All right. Well, listen, does anybody else have any other questions? Final call for questions. Let me take a look here. So I think we did have some earnings after the bell today. Let's see, what did we have today? We have Square, Etsy. Let's see what's happening. So Square has earnings down 7%. Etsy has earnings down 6%. GM had earnings this morning. Yeah, it's down 19 cents. It was just down barely, so that's good. So Square, oh boy, and Etsy. But, so Etsy is down to 64.27. So that puts us at about right here, right at the channel. So who knows? We'll see what happens. We'll see what happens. Murat says my CLF down 10%. Oh, yeah, darn it. I remember we were talking about it back here. Shoot. Sorry to see that, Murat. Darn it. All right. All right, everybody. Well, listen. I'm going to hang out with Mount Doji says, I only scaled out a little yesterday, took some today, holding a small remaining amount, still feeling good. Well, My experience with that, Mount Doji, is if you hold until you don't feel good anymore, you might have given a lot back. You know what I'm saying? But I'm glad that you did scale out some, for sure. Again, this is just my personal opinion, but I got this opinion, one, because it feels good to me, and two, because I've heard it from so many professional and famous traders that you got to take some when the market gives it to you, like Marty Schwartz or Larry High, you know what I mean? And a bunch of other people, Mark Rogers, but take it while you have it, and take it while it's giving it to you. Bruce's phone ring. Bruce, it's okay. All right. Well, good job, Mount Doji. Proud of you, buddy. Proud of you, buddy. But don't hold on forever. Take a little off. Just my own advice, or just my advice. You don't have to do it, but just want to give you my best advice. So, I took a lot out. No worries. Okay, good. I don't want you to give it all back, because that's a monster trade. Good for you, bud. All right, everybody. Well, listen, I'm going to go hang out with Bruce before he heads off to Pakistan. And thank you for coming today. I appreciate it. I hope you're learning something. Please do me a favor. Hit that thumbs up button before you go. And hopefully we will see you tomorrow, and go out and do something nice for somebody. So have a good day, everybody, and we'll see you tomorrow. Thanks again for coming. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor, or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast, or their clients, may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading, and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.